What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 25th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to start by answering a lot of the big questions that many of you have had as of recent that I've seen in the comments down below. A lot of you have been asking about Bitcoin's price, where do I think it's heading, along with that as well, Bitcoin dominance, are we looking for altcoins to start picking up steam soon, and then also, more specifically, talking about Ethereum in regards to my confidence for the DeFi movement. And outside of that as well, we'll be taking a look at a lot of analytics to just talk about what's going on in the sense of equity markets with all the global fear that's been building up around COVID-19, and specifically dive in a little bit into what target range I think is fair for the S&P 500 and the major indices. All right, so we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone, so let's go ahead and start by taking a look across the board for cryptocurrency markets. As we can see, the vast majority of cryptocurrencies are in the red right now, just barely out of neutral territory, around 3 to 4% down. Nothing too significant after a pretty positive green day, or actually, a combination of a few green days in the sense of cryptocurrency markets. We dive in here at the beginning of the video. We'll dive in here specifically to talk, I don't know why I've got my golden arrow there, to talk a little bit about the logarithmic chart here on the BLX index, which is basically an aggregate price index for Bitcoin, taking amongst the largest exchanges based usually somewhere in the Western world where they're regulated, they're oversight, and we know that the volume is pretty much almost nearly transparent in this case, right? So we got volume bars down here, we got the price here, the logarithmic curves here that Bitcoin has held in for the most of its history. And the reason I say most of its history is with the recent sell-off that we had due to most likely, and not only a combination of a demand for cash, fears around COVID-19, but mostly here in this case, we had fear in the sense of what was going on from the Plus Token Ponzi scheme, where they were dumping mass amounts of cryptocurrencies, hundreds of millions on spot exchanges. And that's the third thing I was trying to think about there for a moment, which was the sheer fact that there's such a lack of liquidity on spot exchanges and all this money going onto leverage trading platforms. Now, again, I think I've explained that a decent amount on the channel, guys, but if you want to know about the difference between those two things, to put it simple, derivatives platforms, or platforms where you can trade margin, are basically trading off of the spot price, and the lack of volume that's on spot exchanges, because all of it's going to these derivative platforms to increase their exposure and their risk to cryptocurrency markets, is making it where we can have these volatile moves. So the significant thing to take into mind here, and I will say this is probably giving the biggest point to the bears here for cryptocurrencies, that we might be setting up to challenge one of the most time-tested data science models for cryptocurrencies, is that we had a huge break here on the logarithmic curves. Good news is, by the end of this month, which is what people are looking at when they're looking at this chart, looking at the weekly and the monthly, good news is we got back up above here, right? We're back into the curve from the original chart that at least I've had set on here. We'll have to take a look at the data science models on looking at Bitcoin again in the future. But again, usually to get the most up-to-date price data, we're gonna have to look at the chart here. And right now, at least we're back in there. So it does give some credence to the bulls here. All in all, though, the general thing you're going to look for here, right? We could sit here and debate whether or not this is like the final be-all for Bitcoin, as a lot of people were calling it when we broke originally. The major thing I'm going to look for is if in the next 4 or 6 months, I don't see Bitcoin holding on this line, getting back above 10,000 and continuing to climb up for the next cycle, right? The logarithmic chart is showing us whether or not we're going to be keeping up in pace with what we expected, right? It's as simple as that. It's something that we don't have to overcomplicate. We just have to look for these simple signs here in the chart. That's not something we'll be able to tell overnight, okay? Now that we've talked about that, I want to go ahead and talk a little bit about Bitcoin dominance, and more specifically take a look at it in the form of altcoin dominance. So we can see here in the monthly chart, right, we've been building into a very nice long-term wedge here. taking into the highs here, taking into the general line of support here, building up for an area where we're going to see some form of breakout here probably in the next couple of months going into the later part of 2020. Again, I think the thing that we can all agree on no matter what when it comes to Bitcoin and altcoins is that any kind of bull cycle we're going to see is going to come later in the next couple of months, well after the halving event, as we're talking about a much larger market scale, and we're going to be talking a bit about really getting above that 20K level. And it's very relevant here for altcoins here. As much as we've gotten a nice bump up here in altcoins, guys, I'll be fair, I really think we're going to be pushing sideways here until August of 2020 at a minimum, because we not only need the halving event, I think, to come in to apply buy-side pressure for Bitcoin's price to get back up to 20,000. The reason I say that that's an important factor is because we've seen historically at the last two altcoin cycles that happen in cryptocurrency markets were when Bitcoin reached back to its all-time high at around $1,100. But then the other one as well was at the peak of Bitcoin's price at the end of the cycle. So I think we're going to be looking for the first of those two in this scenario, which is basically the equivalent of Bitcoin going to 20,000, right? To get back up to that previous high that we've had on Bitcoin's price. And that's probably going to happen sometime here in later 2020, early 2021. We might see a little bit of a precursor rally here in altcoins, but really get the momentum later on. Who knows, right? The general thing we want to watch for is that we're building in this wedge here, and not to get bearish on altcoins here, because really, in my opinion, from what I can see here, again, it's just my opinion, but taking a look here at this chart, guys, we've already seen the brutal beating for altcoins. Altcoins are half of where they were back here in January of 2018 in the sense of market dominance. This isn't the time, in my opinion, to really get bearish, right? Now, you guys might have a different viewpoint, and if you do, I'd like to hear down in the comments down below why you feel that way. But also, again, if you agree as well, I think that basically we've got a short window of time here, really in the grand scheme of things. If you've been, in the space since back here, I think you've got the patience to wait a couple more months here, guys. And I know it stinks. I know we want it to happen tomorrow, but sometimes it's just a matter of patience here to really benefit from these rallies. And again, keep the scale of the market in mind, guys. How small cryptocurrencies are compared to the grand scheme of things, right? Gold, a $10 trillion market. Equities, global equities, even with their decline, it's anywhere, I think, in the United States from 50 to 70 trillion in value. I might be wrong on that. And then if you're factoring in global markets, you're pushing well towards 80 to 100 trillion dollars in valuation. Lots of value locked up in the world. And now we've got this market here, cryptocurrencies, that are valued at, well, what's the latest figure? 182 billion. I know which market I'm optimistic on doubling in the next year or so, and that would likely be cryptocurrencies, in my opinion. Now, I want to go here real quick, talk a little bit about ETH. I want to look at the USD chart here, but generally speaking, what I think is likely here for ETH is that we've seen the majority of the sell-off here. We're going to be setting in a third higher low here, in my opinion. That's the major thing we need to see. We set two higher highs here, two higher lows. It's going to be a matter of setting a third one here, and then a third higher low to really get the next cycle going, because when we get up to this range, I think that's when we really kick off the cycle here, when we signal confidence. You can actually see, before we did that on the last cycle, that's exactly what we did. Higher high, higher high, higher high, higher low, and higher low. Right? Not too complex. That's a sign throughout price that confidence is coming in, that bulls are paying a premium from where they would have had to pay back a couple of weeks ago. And it shows eagerness in price, right? We can also take a look at ETH USD on Bitfinex. Very important to take a look at as well. Interesting thing to note here, right? Though we did say a lower low here in this case for ETH, of course, the whole market had a complete disruption if you're taking a look at terms of USD. All in all, right, we've been writing about this golden range down here for a while, right? This little range down here between about 100 to 80 bucks here for Ethereum. If you're able to scoop it up there, you're a lucky fellow, in my opinion. But well, actually, sorry, this is the reason why the chart's not looking good. We didn't have it on the logarithmic chart. There we go. So ETH to me right here still looks good, because even after this pullback, we still set a higher significant low than this base level over here, right? And the sell-off volume has stopped. Price has recorrected. We're back to around $135. It's just a matter here of getting back up And I think really to really resound confidence in ETH in the sense of sparking its next rally, it's going to have to get above this range here, above 280 to 300 bucks, and just hold for a little while, similar to how it did over here, right? You can see again price action back here showing significance. It can probably give us some precursors here to what's going to happen in the future. And when we do that, I think we can really spark for the next rally and even climb past the previous highs if we really get into the crazy next cycle for cryptocurrencies as we scale out to a multi-trillion-dollar market for crypto. Now, an important question here, guys. I know a lot of you are curious to know, Nick, that might be the case in the next couple of weeks or months that ETH might get back up there and might spark this next rally. Are you confident right now? And I think that's a very good question. For me personally, yes, guys. And the reason I say that is because Ethereum's not only got a lot of things coming in the sense of ETH 2.0, which is going to include staking, which is going to set a lot of demand here for the ETH currency in this case, or Ether. But along with that, it's really about DeFi. There's no other thing in the crypto space. I mean, if you're just long on this space, right? If you're bullish on crypto to some degree, if you think there's a 10% chance, if anything, that this space is going to become a revolutionary new asset class, you've got to be in it on DeFi. You've got to. I mean, people who are ignoring DeFi and bullish on crypto, I don't see the correlation here, because I'm interested in the argument of a store of value. I'm interested in the use case of being able to store wealth. But being able to do interesting things with that wealth, right, in unique ways, without permission, with the ability to have an open market of developers who are building the best applications that offer the best services at the best rate of efficiency and security, that's what interests me, right? Now, DeFi isn't ready for the mainstream yet. We've seen that as of recent, and I think that was a big reason why ETH's price really sold off in this. I would say it's a fourth factor to why ETH's price went down, as we have the three factors as to why Bitcoin was going down. Plus Token had a lot of ETH that it sold. There's a lack of spot liquidity, as we can see here, nowhere near the volume we used to get on exchanges like Bitfinex. And along with that as well, right, we also have the need for cash. But the fourth factor here is the sheer fact that Maker had a huge amount of liquidations. MakerDAO, one of the largest DeFi projects, it's got a lot of issues that need to be resolved. And that goes for a lot of different DeFi projects out there. So I think that they are going to provide a lot of interesting challenges that can be solved. And once those challenges are solved, I play the optimistic role here when it comes to technology. I believe they will get resolved. And if they do, in this case, ETH is going to continue climbing higher. There's a lot of people in this world who could benefit from the DeFi space. So I recommend you guys look into it. I really recommend. We've got something coming soon. It's taking a little bit longer than expected, guys, but we've got basically a project I've been working on, a company that I'm very, very excited to reveal, that is going to help encompass a lot of the DeFi space. So stay tuned for that. I know you guys will really like it. All right, so we've answered a lot of the big questions here in the sense of crypto markets. Again, generally speaking, I think the main thing to focus on, guys, is just I'm not changing my positions. I'm not fretting too much. I'm not changing in and out of altcoins to Bitcoin too much. It's just not worth it trying to trade these markets, right? Now, I want to go ahead and talk a little bit about traditional markets. Go ahead here. We'll get the latest up-to-date market reports here in the sense of current futures. We're seeing markets anywhere from 4% down to negative 1.5% here in Poland. We can see here, though, for U.S. indices, right, generally neutral. Small caps still down about 0.5%. NASDAQ and S&P 500 neutral, and the Dow Jones up over 1.16%. And this is coming after the biggest rally we've had in years for the Dow Jones. Massive break. I think it was the third best day for the Dow Jones in history yesterday. And the reason we had this is because the money printer is going brr. We're having, I don't know if you guys have seen that meme, but basically the Fed has announced that it's going to be injecting up to $4 trillion of liquidity. We've also got the federal government coming in with its stimulus package, which is going to include $2 trillion, most likely supporting American families with paychecks, in this case, that are going to be directly deposited, small business loans, basically bailouts for large corporations, you name it. There's money galore, right? Green everywhere. Now, I want to go ahead and talk a little bit about a few different indices here. So there's market breadth here, which is a really interesting measure here that showcases the amount of companies that are either 52-week lows or 52-week highs. So to put it simple, again, the chart is showcasing that the broader equity market for the United States has experienced a dramatic sell-off. Over 80% of stocks now are showcasing new lows versus new highs. And we can see that this is the fourth worst time in history that we've ever seen for this in the sense of the weekly chart. Here we can see back here in 31, we had 81%. Here in 37, we had 94%. Over here as well in 2008, we had up to 82%, and now we've got over 80%. Now again, this isn't to say that we couldn't see this number grow over time. It could extend, as we saw back over here, for example, in 31 and 32. Again, we saw an expansion of this, and we had multiple weeks where we had new lows, in this case for the vast majority of stocks. Right? We could very well get that, no doubt about it. We'll have to see, though. Again, I think more than anything, this is showcasing here we've had one of the most dramatic sell-offs in history. And we'll see that more and more as we look through these charts, guys. Mutual funds in the United States seeing their biggest drop in assets under management since 2008. 15%. Just a percentage shy of what we had back here. Well, 15.2, but 16.2 as well. So really just a percentage difference. Incredible stuff. And in the time period that we've seen this, I mean, this is really saying something. Along with that as well, again, focusing directly on time periods here to get the kind of drop we had, 30% drop. We had the fastest on record 30% drop in history. You know, for example, a lot of people compare this to 2008. Really, we have to start here in 2007 when the first initial 30% decline came for the recession that happened back then, right? 250 days to get there. We did it in 22. This is not like 2008, guys. And when you've ever heard me probably say that this is not like 2008, it's not that I'm saying that equities aren't going to go down and that gold and silver won't go up. I'm not saying that stuff. What I'm saying is that we have to be a little bit more broad in understanding different market cycles in the past and understanding what we can compare it to. This is very similar to the 30s and the late 20s after the boom in the basically the Roaring 20s and then the Great Depression. And this is why I've been really hitting home on the point, guys, that even though we're tossing a ton of money at the system, right? Even though it seems like in the next couple of days, according to the current administration, we might be able to go back to normal and have businesses operating. This is going to leave a long-term impact on the consumer. It's going to leave a long-term impact in the sense of the people that this virus ends up killing unless we can have some form of vaccine soon. And that is going to put massive disruptions, mostly on our healthcare system, lives lost, families distraught because of this. This is going to have long-term ramifications. And it's going to make it where even though you can toss money at the problem, it's not going to be the cure. It takes time to recover from these things. And that's why stocks have sold off so dramatically, right? Now, a good similarity here to take into mind is the Dow Jones and how it's performed so far, right? We had a 37% decline in 27 days, very similar to the 40-day decline that we had of over 40% in 1929. Interestingly enough here, we're getting a rebound this morning. In fact, well, we actually had a rebound yesterday of around 10%. Very similar to what the chart has outlined here. Could we be seeing the exact same kind of bull trap here where prices come up and reverse back down for even worse lows than before we get a full recovery? That could very well be a scenario, right? I think, though, that even though we might get this rebound, the drawdown, if we have one, is going to be a little bit more longer term, right? It's going to be difficult for prices to go down too much with the amount of inflation that we're about to get here and the injection of new cash, right? That's something I think is very important to get across. And this again here highlights that significance. If you really just want to see it visualized, right? We have the lows of all these different market corrections, as well as the rebounds of what happened afterwards. In this case, showcasing here back in the 60s, setting a new high, right? So again, very interesting stuff to take into mind here. Just again, the sheer value decline from this correction was something that was historic, guys. If you've been here, you've been witnessing history. which is pretty cool. Again, whether you're long stocks, whether you're short, whether you're not holding a position or just maybe in cryptocurrencies, it's fascinating to think that we could be here together during this time. And I'm so happy I could be doing YouTube like I am right now, having you guys here on the channel. It means a lot. It really does. So I appreciate it, guys. It means the world to me personally. Now, taking a look here right at the rebound we got, pretty significant day for the S&P 500. Markets have now opened, currently sitting a little bit under a percentage point here for the S&P 500, quickly rising though. Question here is whether or not we're going to be able to hold, right? Was this the third lower level here, right? Some people would, for example, draw a general trend line here. Some people would say that we need to be exactly in line with the absolute bottom of the wicks. May not be, right? We could be just setting our third lower low here. I think in general what we're getting is a relief rally here. You've got the stimulus. You can't bet against it. It's like we talked about back here, guys, in 2018. When the PPT, or the Plunge Protection Team, Secretary of Treasury, in this case Steve Mnuchin, meets with the other elements of the central banks and all kinds of different things that can boost the economy, right? They rebalanced the pension funds, took out a huge multi-billion-dollar equity long position on people's retirement accounts. But along with that as well, Fed started to relieve the economy, started to lower interest rates, started to readjust and take on to the idea of quantitative easing again, right? Stepping into repo markets throughout this time period. They did everything to keep equities higher. But this time around, right, we're going to get a relief rally because the Fed is injecting cash. It's quantitative easing. And along with that as well, the federal government is taking on a larger deficit, a massive stimulus package for the economy. But I think after a while, though, we're going to see this start to roll back over. I think like 1929, we're going to have one more lower level here, significant low. And then after that, perhaps there's a chance for equities to rise up, all right? I think that's what we're going to be looking for here, guys, because in the longer term of things, there isn't many times where we sell off like this. And this is the logarithmic chart, bear in mind, just to be fair, right? And we could turn it off and makes it look a little more clear that we've probably got a full-scale recession come through, so we're probably going to come down to somewhere in this range. But all in all here, right, looks like we got a little bit of a ways to go. Who knows? Could be like what we saw back here in 1987. We could rebound right back. If we find a cure tomorrow, that would change the whole story. But it's likely going to be that until we have 8 to 12 months, we're not going to get a full-scale vaccine. And this will continue to get worse and worse before it gets better. I hate to say it. I'm a very optimistic type person. I know that might not come across as I've been bearish on stocks over the last 2 years, and usually people are like, oh, Nick, you're so negative. I'm actually a very optimistic person. I traded equities for a very long period of time, but I knew as the Fed started to ease back its policy that you're much more likely to get a pullback. I didn't know, though, that it was going to be a recession or possibly a Great Depression around a virus, though. No one could have probably predicted this. We could have probably seen it and had a little bit of foresight keeping up with it in China since back in late January and early February, but I wouldn't have expected it to be this bad. So, above all, guys, no matter what happens in markets, I'm praying for you. I'm praying for your families. I'm not a big religious type myself, but I am definitely thinking about you guys and hoping for the best for all of you, right? And I hope in this time we can all do the small things that can help to cut and curb back on the amount of deaths, the amount of people affected by this virus, and hopefully get to spend some quality time with their family and friends, right? I think those are the important things. Markets are secondary, right? But the best thing we can do is come prepared, and when those opportunities arise in markets, we take them, right? Anyways, I'll let y'all know if I change my mind on stocks. I know many of you might be curious about buying positions in them. I'm definitely building up a cash position to buy in equities because I'm already kind of well positioned in crypto, personally speaking. But that being said, I'll let you all know as time progresses. And the sense of crypto, I know we're at a pretty good discount here for crypto as well. And many of you might be looking to possibly get your first position in Ethereum, Bitcoin, or some of the well-known cryptocurrencies. And if you're interested in that, you can always check out our sponsor, eToro. Now, for those of you who may not know, eToro is a social trading platform where you can buy a wide range of cryptocurrencies and communicate with a wide variety of traders across the globe. They even have their copy trader feature, which allows you to copy alongside a lot of different large traders, including myself. So you basically just have to go to the copy trader section, basically click on a name that you like, and click the blue copy trader button in the top right. But you can also buy individual crypto as well. So if you're interested, check out the links down below in the description to learn more today. But anyways, that's going to be it for the video, guys. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.